After another banner year in 2010, the price of gold and a lot of emerging market currencies and stock markets have gone down to start 2011. I'm joined now by Peter Schiff, President of Euro Pacific Capital. And Peter, what we're seeing here to start this year, is this just profit taking, or are we seeing some change in the trend? And let's start with gold, which hit a new high last September and has come down 5% or so since then.
Yeah, well, I don't think it's a change in trend. I certainly think that people are taking profits, and there's a lot of profits to be taken, so I would imagine that that would happen. And I think there's two catalysts for what's happening with gold. I think one of them is the recent surge in the euro against all the currencies, including the dollar. And I think that a lot of people coming into the beginning of this year were long gold in terms of the euro. That was a popular trade,
right.
Short the euro, buy gold. I think that trade is being unwound right now as you see gold and the euro heading in opposite directions, which is not typical. Normally they're going in the same direction, but now they're going in opposite directions. So the decline in gold in terms of euros is much greater than the decline in terms of dollars. So I think those trades being unwind is pushing down gold and silver. And then I think also renewed talk of tightening and actual tightening in China is causing some selling in precious metals as well. But I think it's creating a buying opportunity in both metals. Where the bottom is, I'm not smart enough to figure that out. But I do think that, we will be making a new high. And so anyone I think that's buying on this dip will be rewarded.
Okay, so let's talk about the stock market. The major averages here in the U.S. Recently hit multi-year highs. Have you been too bearish on U.S. stocks, especially relative to some emerging markets like China? The S&P outperformed the major Chinese indice last year.
Yeah, but over the last 10 years, that's a rare occurrence, and I'm not a short-term timer. And so there could be periods of time where U.S. stocks outperform, but I think those periods will be brief and few and far between. So I'd rather invest abroad. And then a lot of times, you have to dollarize those returns. So the dollar has been weak over the last 6 months. So a lot of these foreign markets, when you adjust for currencies, are doing a lot better than when you just look at the headline in local currencies.
Right. So you're sticking, it sounds like, with the main themes you've talked about for the last several years, which is being long commodities, long international stocks. Are you short the dollar, short the U.S. market? How are you positioned here?
Yeah. Well, when you're long foreign stocks or foreign bonds, by definition, you're kind of short the dollar. So that's my trade. And, some people think, the U.S. stock market is going up, so you're missing out. Well, if you're invested in things that are going up faster than the U.S. stock market, you're not missing out. Meanwhile, recently the U.S. stock market is not looking that good. If you look at some of the smaller stocks, look at the Russell 2000, you're getting a different picture there than you're seeing with maybe the Dow or the S&P. So it seems like money is being taken off on the risk trade. The small cap stocks are not doing as well. People are putting more money into the larger cap stocks. So that could be masking the fact that we could be in for a correction here in the U.S. stock market. Meanwhile, look at the other financial markets. The bond market is getting beaten up, both treasuries and communities, and the dollar has now resumed its descent. So you've got all financial assets in the U.S. right now under pressure, stocks, bonds, and the dollar, and that's not a good sign.
Right. So where do you see the best opportunities for 2011 from the long side?
Well, I think they're in the same place. I think the precious metals, I think, what's happening right now with the dollar renewing its weakness, even against the euro, I think a weak dollar is a better environment for gold and commodities than a weak euro, and that's where I think we're headed. So I think you still want to buy the precious metals, commodities, energy. Oil seems to be stuck here just below $90 a barrel. I don't think it's going to stay there much longer. I do look for oil price to move above $100 a barrel this year. Industrial metals, same old themes. And I think that the emerging markets, which didn't do that well recently relative to the U.S., are going to come back strong. And I think those are the markets that you need to focus on, as well as the natural resource economies.
All right, Peter, we got to leave it there. Thanks very much.